Um, Good afternoon, ladies and gentlemen, and welcome to this week's trade review. It's been another good week. There's been decent profit returns, but as we know, with the roller coaster that is me and trading, it's not been without issues as well. So, and we'll look at those in a little bit more detail. And I want to explain a few things to you in relation to trade size, which we spoke about a little bit last week, discipline and keeping your trades at a percentage risk, which means that you keep yourself safe. Obviously, Wednesday was a day where I got myself into a situation where I had a number of trades open, and if you didn't have the discipline, and if you didn't have your trades at an acceptable risk level, then there was every chance you would have difficulties with your account if you were running a small account. Even for me, on Wednesday, with the number of positions that I had open, it was getting awkward, and I decided to stop and watch rather than to continue to be involved in the market. And thankfully, over the last 10, 12 hours or so, managed to turn the position around such that whatever difficulties I was facing or losses that I was facing yesterday have been completely eradicated and have gone into profit now. But we'll talk about that in a little bit more detail as I go through this afternoon. As always, please ask questions. Gives me something to talk about other than trying to dream things up myself. But if we start off by looking at the results this week, so that's the results. The few Monday and Tuesday were both very good, and have been, to be honest, where the majority of the profits were made, both Monday and Tuesday. Wednesday took a couple of small trades late on, one of which I closed out that evening, the other I allowed to run over into the following day, and you can see that 250 pip loss there. So significant loss on that particular trade, and then the following day, Thursday, it wasn't Wednesday, so Thursday, a couple of stops again on Thursday, going through that grey line, which signifies the over trading part of things, and it was earlier in the day a lot worse. A lot of the trades in the DAX and the Dow were heavily against the money. And if trades are not kept at that 2-3% maximum risk level, once you have 4 or 5 positions on and they're going against you, you very quickly ratchet up to 15 to 20% worth of losses. And that's certainly where I was during the early part of Thursday. And if you don't have if you're risking more than that in percentage terms, there's every chance that you blow up your account. So it is really, really important, as we spoke about last week, to make sure that discipline is kept as tight and as consistent as it possibly can be. So if you have 4 trades open, and that's not going to be all of the time, but if you do have 4 trades open, then you are able to keep the margin going, to be able to manage those positions through. And we've spoken previously about trading being as much about making money as sometimes managing your positions through as well. So Thursday was a good indication of that. Now on the day, I ended up down 77 pips, but if I would imagine, and I don't have the exact number for you, but I would say that there were times early in the morning that was closer to 1,000. And you can see the 2 stops that I did make, the Dow at 28,080 and the DAX at 12,620. The Dow was fairly close to the low, and obviously had I held it, we would have been back in profit by the end of the day. But prudence or being prudent is part of the game as well, and it was important that I took those stops to give me some more wriggle room, if you like, on the other trades that I had remaining as well. So negative day on Thursday. And definitely a negative day in terms of the trading that went on, but managed to turn it around, and today has been fairly steady, fairly slow, but fairly consistent as well. You can see 20-30 pips worth of profits on all of those trades during the course of today, and another 222 pips on the day. So I'm just going to put us back to the trade screens, and you can see with the Dow at the moment we've pushed through 28,700, trading 28,726. Seems to be a bit of stop activity in this particular range, but we are trading at a high. And if you go back to my market comments this morning, you know, my preference is to be long. It's not what I usually do, to be honest. We would, you know, I tend to sell into the rallies, but today, just looking at the political landscape, if you like, in the United States at this time, I just have an inkling that a stimulus deal will be passed in the short term pre-election, and that's going to give a movement to the upside. If you fast forward to the election, and regardless of what result there's going to be a stimulus bill fairly quickly afterwards. Very different in size, I would imagine, but again, there's a chance that we would that we will see a decent movement to the upside then. So my preference at the moment is to be a little bit long. It's not a situation I like to be with the markets at these advanced levels. So it's always, you know, I'm trading with slightly smaller trades from time to time, certainly at the beginning of the day and at the end of the day. There's a few questions coming in. There's a few things that we want to get across to you today as well. So Fly Smith, enjoyed the ride this week. You're the only one, I think. I just wondered what else you have on your trading screen other than candle charts, indicators or level 2, etc. I don't really have a great deal, to be honest with you. I like to keep it as simple as possible. So I'll always have CNBC going on in the background. They're always a good early alert to any breaking news events or the earnings results when they start to come in. That's really it from my perspective. I mean, you can sit there with a TARDIS with 25 different screens around you, but you know, try to simplify it as much as you can and have enough. You can overdo it. I think that's the key message that I'd give you there. So the candlesticks are a key part, but as I think I've mentioned over the last few weeks, you know, rather than trying to get too technical about everything that's going on, for me, it's very much about developing that bias and trading with it and understanding why you're trading the way that you do. You know, I tend to think a little bit about my trades, which isn't always necessarily a good thing. You know, one of the common approaches is, or one of the common thoughts in relation to trading is you trade what you see, not what you think or what you hear. I tend to do a mix of the two, unfortunately, and sometimes it does go wrong. So Andrew is asking, do I set a TP or a stop loss if I'm leaving a trade overnight? If so, what is the level that you set at? I would consider very closely before I leave a trade overnight. I need to believe that it has a decent chance of coming good. I think in the majority of cases, if it's a large trade, I would look to close it. If it's a small enough trade and you still think that it has a chance of coming good, then I'm happy to run it. Would I leave a stop? Unfortunately, when you're out of the live trading hours, it doesn't happen so much with Ava because, you know, there's good liquidity and good banks behind the prices that you're seeing on the screen there. But with some of the other providers that are out there, they are their own liquidity providers, and sometimes you can see stop hunting. It's supposed to be illegal and not happening anymore, but I guarantee it does. You know, it's very, if you have a limited liquidity, it's far easier to move the market in the direction that you want. So you know, gold for me is a particularly awkward one during the Asian trading zone. It seems to have very expansive movements, and they very rarely appear to be true movements the following morning when the Europeans are back at their desk. And I would put that down to a lack of liquidity during those particular hours. I could be wrong. but I know that sometimes you can see gold jump higher by $15 to $20, and then very soon after the European Open, all of that has evaporated. So the first thing is consider very strongly whether you want to run the trade overnight. Look at the size of it, look at the exposure, how far into your stop are you already. But my preference is not to run too tight a stop. If you've made that decision and you've committed to that trade, that little bit already. Niall is asking, so 1,000 pips down, what would be the number where you would decide, okay, that's it, I'm out? Or did you have confidence in the index based on market info you held for a smaller loss? There was a couple of things yesterday. There were some key levels in the Nasdaq and in the S&P that I was looking for the market to hold. It just about held them, but 1,000 points down, Niall, to answer your question, I'm very close to stopping everything out. So you then have a choice. Do you stop everything out in one fair swoop, or do you start to unwind some of the positions? And for me, I'm still those levels were close. I was worried with the number of positions that I had open. I didn't want to see the levels tested anymore, but the levels ultimately did hold, and as you can see, we've had a rally of about 620 points off of those levels, especially in the Dow. The Dow did go a little bit lower, so you've seen, if you look at the high of today based off of the low of yesterday, we've had a rally of about 700 points. I would have spoken to a couple of people that are trading at this time as well, and and got their opinion on what they were trading and what they thought of the markets, and the consensus was pretty much the same, that we were looking for those levels to hold. Otherwise, it could have been Armageddon, and Armageddon wouldn't have looked particularly good with 6 or 7 trades open. So I closed a couple of those. So I used a couple of those stops to give me that capacity to go a little bit longer with the other trades I was holding. So Mohammed is saying, what a ride yesterday. And he didn't do too badly. I separately used the uptrend with Nasdaq, but my stop on the DAX was horrible. Well, you and me both. My stop on the DAX wasn't quite as bad as the stop on the Dow. That was fairly close to the low. But it's again, it's a similar sort of thing. The Nasdaq level was key. The S&P 500 level was key, and whether they hold out. So Andrew is saying, thanks, I've got stopped out of a long gold position overnight, Tuesday, Wednesday, literally to the cent when it stopped. It then rallied to the upside. Yeah, look, there is nothing worse. It's one of those things, unfortunately. Depends on your broker. Like if you were trading with AvaTrade, then the stop is genuine. What I don't like about the stops sometimes is that they stop on the spread. If you were trading with IG or with CMC or one of those guys, there is the potential that there was a bit of stop hunting. They see where your stop is, they rally up to it or fall to it, and then move immediately in the opposite direction. It's quite obvious to see. Unfortunately there's nothing that you can do about it. It's just a function of liquidity. So look, thanks for those questions. Thursday, as I said, just have a look at the trading from Thursday. If you you just think with that exposure, with the number of trades, if your risk is at 10% or 15%, if you go back and you look at what risk you're giving to the market all of the time, if your risk is at 10 or 15% of your account balance, your account has gone. If you're running 4 or 5 positions open, so you need to either reduce the number of positions or more importantly and more sensibly reduce the size of your trades. I know sometimes it's not very exciting, but the way to keep yourself safe and to manage that risk as effectively as you possibly can is to keep your risk at an acceptable level per trade, and that will then turn into an acceptable level per complete position. So Sam's done me a couple of images up here of so obviously we've started Dupli Trade this week. A number of you have signed up to that service, so the trades automatically are fed through to your accounts. As an extension of that, what we're going to do from Monday, because unfortunately I missed posting a trade today, a gold trade earlier today. I gave you the take profit level, but you weren't in the trade, so that's completely my error. And it's a case of trying to make sure that you cover all of the different bases. But this is the test channel that we've been running. So this is one of the trades from today. So there's the new trade, so specified by the word new. So sell the Dow at 28,506. You won't immediately get a stop loss and a take profit level from me. They will be modified later. So the next one is a TP level being input into the trade. So you can see the TP there at 28,480. So it was a modified trade. These are all the same trade ID. This is one that we did this afternoon. And then the trade was closed when the TP was hit at 28,480. So it gives you the closing price, it gives you the profit. Now, these should come to you a lot quicker than you're currently getting my manual updates, which can be a little bit long-winded. So you'll still get the market comments and anything that I'm thinking during the course of the day. But you will, this is the way that you will see the orders from Monday morning, and it will rule out the chance of me taking a trade and not reporting it on Telegram, which is not what I want to be doing. So just going back to the markets, just to see where they are at this particular point. And just talk in general about the way that the markets are going. There is a question there from Chris, which is saying, what do you mean by against the money? I'm not sure I said that, Chris, so I'm not ignoring the question, but if you email me later, I'll gladly try to explain what I was saying. The markets at the moment are starting, the stimulus or lack of stimulus is the thing that's preoccupying the market. As I've already mentioned, I think that as we move closer to the election, I think the chances, I think there is a chance that we'll have something passed very soon. It's being discounted a little bit by the market. Maybe it's being written in a little bit today. Coronavirus is obviously an ongoing issue, but it seems to be accepted by the market as an issue. Were we to have big spikes over the weekend, then potentially it becomes a more pressing issue at that point. We do have the IMF meetings taking place over the course of the weekend. I was listening to the chief economist from the IMF during the course of the week, and she was far more positive than I was expecting. So I think the themes of a continuing economic recovery, as evidenced again with some of the data out of China this morning, seems to be preoccupying or having more prominence or more impact on the markets than coronavirus. And unfortunately, while we all worry about things that are going on in that regard, the markets seem to be slightly, I'm not going to say totally, but they seem to be slightly immune to developments in that regard. But I walked around town a little bit earlier today, lots of businesses closed, lots of stories about people losing their jobs, and that is not going to have a positive impact on the economy. But right now, it's about earnings, about what companies are doing at this particular point, and whether or not we're going to see some form of stimulus package before the election. So I'll leave you there. My time is up. Anybody interested in DupliTrade, please get in touch with me or Sam. The new trade advices in terms of the way the trades that I've taken will come to Telegram from Monday morning, from first thing Monday morning, and please take a look at them. I'm sure that they will be available for a while, and make sure that you understand them, but they are fairly simple, and they do follow in chronological order as an update is made. Thank you very much.